I am sick and tired of seeing you fail your prop firm challenges again and again and again. It is a dream for many new traders out there to get that 6-figure funding status from these prop firms so that you can earn a life-changing amount that would change the trajectory of your financial journey. But yet, you don't even know the path to get there. That's why in this video, I'll be showing you the exact blueprint that will get you from $0 to $10,000 a month in income by leveraging on prop firms. By the end of this entire course that other people will charge you thousands for, you'll be equipped with the knowledge and expertise of passing a prop firm and getting consistent 5-figure payouts like these. Of course, these prop firm challenges will cost money, so your commitment to the path of becoming a fully funded forex trader must be 100% sincere. If that sounds like you, then pay attention and let's go. To give you guys a better understanding, most prop firms in the industry have a 10% profit target for phase 1 and a 5% profit target for phase 2. The risk parameters that you're allowed to play with is a 5% daily drawdown and a 10% overall drawdown for the challenge. The key to passing these challenges is that you make sure that you have proper risk management so that you don't bust the challenge in just a few trades. Many of you take challenges at face value without having a structured plan on how to pass it. You guys basically purchase a challenge in hopes of receiving a huge payout from the prop firm. In essence, basically you're just jumping off the building and planning to land without any safety precautions. But how can you be a superhero with prop firms if you have no idea what precautions to take, what the exact entry criteria is, what your exact risk management plan is, and so on? So, I'm here to give you a full step-by-step guide on how to get to that coveted $10,000 a month income using a proper risk management plan, a proper trading strategy plan, as well as some psychology hacks. So, let's get into the first part of the course, risk management plan. I have refined this strategy after passing multiple challenges from many different prop firms, including FTMO, My Forex Funds, E8, Nova Funding, and Funded Engineer. The plan that I will personally use for the challenge phase is as follows. Phase 1, I will risk 0.5% per trade till I hit 2% in profit. Once I have achieved that 2% in profit target, I will then up my risk to 1% per trade until I hit the 4% mark. This means that all I need is a 1:2 risk-reward ratio trade to hit once to reach that 4% target. And lastly, risk 2% per trade to hit that final 10% target. Now, you may be asking, what happens when you are in a drawdown? What do? Simple. Stick to the 0.5% risk until you climb out of the drawdown and you're back at your starting balance. The reason for not risking more is because everyone will experience a losing streak at some point or another. Even the most profitable traders have losing streaks that last 3, 4, or even 5 trades in a row. So, increasing your risk to climb out of a drawdown should not be what you should be focusing on. Instead, follow the risk management plan to the T. Do not change the risk as and when you feel like a trade is super high quality or low quality. If you do the math, you will need 20 trades in a row to bust the entire account. However, if you have a profitable strategy, that really isn't possible unless you are emotional when you trade. Moving on to phase 2, you are 1/3 of the battle done. This time, you want to be conservative because this is where most people get greedy and start to force their way to get their funded account. What they normally do is that they will start to make riskier decisions to try to pass the challenge in one trade. I do not believe that it should be the way that is done. In fact, you should be more conservative in your approach to pass phase 2. Now, what you should do instead is risk 0.5% until you make 3% of your profit target. Then, when you hit that 3% in profit, then you will start to risk 1% per trade. This will be the trade that will put you over to that 5% overall profits with a 1:2 risk to reward trade. However, if you're in drawdown for phase 2, not to worry. Stick with the 0.5% risk until you get back to your starting capital and follow that 0.5% risk rule until you hit that 3% profit target and then scale up your risk from there. Once you have finally passed your challenge, you will gain access to live funds where the profits you made, a high percentage of it, roughly around 80 to 90%, will be paid to you in the first 2 weeks once you have placed your first trade. This is where most people make a huge mistake. They feel that they are super close to the finish line and will most definitely get their payout. So what you'll do is that you'll risk 1 to 2% per trade on your funded account as much to get as much on your first payout as possible. Wrong. This will only cause 90% of you to lose your account before you even get your challenge refund and your payout. What you want to do is play super conservatively, risking 0.25 to 0.5% per trade max, and limiting yourself to 1 to 2 trades a day. The reason for this is that you want to be able to withdraw a small amount to be eligible for a challenge refund. This means that you are risk-free in your prop firm investment. This would effectively mean that you got your funded account for free after your first payout. Only after you've gotten your first reward should you look to increase your risk and trade the 0.5% per trade to 1% per trade. Understand that the majority of traders I know who have received several payments in the 5-figure bracket only enter 2 to 3 trades per week, whether they are scalps, swings, or intraday. This is due to the fact that they do not take advantage of every single trade opportunity that comes their way, but only cherry pick the highest probability trades. This is how they achieve consistent payouts. They wait for the market to come to them rather than chasing price. With the risk management strategy in place, the next step is to get a profitable strategy for yourself. I will be giving you my personal strategy that I use to attain multi-6 figures in asset under management in prop firm accounts. The strategy I use is called SMC Asian Sweep Strategy. For those of you that are new here to trading, the Asian session happens from the 8 AM to 12 PM GMT plus 8. This is where the markets are ranging and consolidating. This is because London and New York sessions are where the higher volume sessions are, and the big whales in those parts of the world are still sleeping. The goal of this strategy here is to take advantage of the liquidity resting at the Asian range high and the Asian range low. This is apparent for what I have traded over the past 5 years, and it has happened almost every other day. Now, before we go into the steps, I want to lay out some ground rules. The time frame that we will be utilizing are the 50-minute time frame to analyze the charts and the 5-minute time frame to execute our trades. So, step 1 of the strategy is to mark out the high and the lows of the Asian session from 8 AM to 12 PM GMT plus 8. Ensure that the range of the strategy between the high and the low of the Asian range is not more than 30 pips. If the range is more than 30 pips, there is a high chance that the price will continue to trend during London and the strategy will not work. So, be careful. Step number 2. Wait for price to sweep the Asian high or low. We're looking for a sweep of the Asian range as retail traders who are looking to trade the support and resistance of the range have their stop loss orders above the Asian high and below the Asian low. We want their positions to be liquidated first before we look to enter a position of our own. Step 3. Once price sweeps the low or the high of the Asian session, look for a 5-minute fair value gap in the markets that form away from the Asian level's swing point. For those that don't understand what fair value gap is, it is a candlestick pattern that forms when price impulses from one price to a different price. And how you identify a fair value gap is by a 3-pattern candlestick. For a bullish fair value gap, you're looking at the first candlestick's top wick to the third candlestick's bottom wick. For a bearish fair value gap, we are looking for the bottom wick of the first candle to the top wick of the third candle. The gap in between these levels are called your fair value gaps, where there are limit orders yet to be filled, resulting in price coming back sometime in the near future to fill these orders. So, when price retraces to said fair value gaps, we proceed to take the last step, which is to take an entry at the fair value gap with stops covering the swept swing point and target the opposing liquidity of the Asian range. For the first example, we have a Euro-US dollar chart on the 5-minute time frame. As you can see here, price has created an Asian range of about 11.6 pips wide. As price approaches London, price decides to sweep the Asian low session before impulsively shifting structure towards the upside. This creates a break of structure towards the upside, and in the process, it has created a bullish fair value gap. This has given us our bullish confirmation to enter. So what you can do is set a buy limit at the bullish fair value gap and target a 1:2 risk to reward ratio. This is in line with the goal of the strategy, which is to take out the opposing liquidity in Asia. So let's see how this trade plays out. And there we go, TP smashed. For the second example here, we have a GBP US dollar chart on the 5-minute time frame. And from here, we can see that there is a sweep of the Asian high. After the sweep of the Asian high, there is a bearish fair value gap formed right after the sweep of the Asian high. So what you can do here is set a sell limit at the newest bearish fair value gap and put your stop loss above the new high created, targeting a simple 1:2 risk to reward ratio. And as you can see, we hit the target as well as take out the Asian low in the process. Now for the third example, we have the GBPJPY pair on the 5-minute time frame, and we can see that price has created a 30 pip range, basically pushing on the high side of the Asian range, but it is roughly acceptable because of the nature of the pound yen being more volatile. After the Asian session, price swept the Asian high. However, it did not create any bearish fair value gap, so we have to be patient and wait for one to form. After a short while, price creates a bearish fair value gap as seen by the 3 candlestick formation over here. So what we do here is that we place a sell limit at the new fair value gap. We stop above the high and target the Asian low that hasn't been swept. Now this is what we call the sell side liquidity for Asia, and this is what we're aiming for. Let's see how it plays out. And there we go, TP smashed as well. Now onto our fourth example, we are back at the GBP US dollar chart on the 5-minute time frame. Price here has swept the Asian low and created a fair value gap towards the upside, creating a bullish fair value gap. Now, price didn't retreat to the fair value gap and it rallied all the way towards the Asian buy side liquidity, which is the Asian high. This therefore makes the buys invalid as the high has already been swept. Since the latest sweep is a buy side sweep, we are looking for sells downwards caused by a bearish fair value gap. So once it forms as seen over here, what I did here was I placed a bearish fair value gap sell and target the opposing liquidity. And let's see how this trade runs as well. There we go, TP hit. Now for our last example, we are still on the GBP US dollar chart on the 5-minute time frame, and price here has created a 20 pip Asian range as seen over here. During London, price swept the buy side liquidity at the Asian high after price decided to create a break of structure to the downside along with a bearish fair value gap. Now this gives us the perfect entry criteria to take a shot at the fair value gap with stop loss above the swept Asian high to target the Asian sell side liquidity, which is the Asian low. You can target a 1:3 risk to reward ratio and set SL to break even once the Asian low gets taken out. Let's see how this trade plays out. And there we go, TP smashed as well. Alright, so now that you understand how this strategy works, there are some intricacies that you need to take note of. Firstly, this setup happens only once per day on each individual pairs. Therefore, you shouldn't be taking multiple trades on that pair if you see a setup, because if you do that, you're most probably overtrading for number one, and number two, you have gotten the concept wrong in the first place. The second point to note is that this strategy happens mostly during the London session. Do not try to enter a position before the London session, as price action before London is relatively low volume and very prone to manipulation. To protect your financial and mental equity, stay away from your charts until the London session officially opens. Lastly, and most importantly, this is a scalping strategy. That means that we are trying to stay in the trade for a maximum of 2 hours. If the trade runs past that 2 hours mark, you want to put your stop loss at break even or de-risk as soon as possible. So, with all this knowledge on how to trade and pass a prop firm, how do you make your first $10,000 a month trading? This is where we have to do some goal setting. Let's crunch some numbers to see how much you need to earn every single week. In order to get a $10,000 payout, you need to make $12,500 in profit on your 100k funded prop firm account. This assumes that the prop firm will have an 80% profit split. Now, there are 20 days in a month of trading. So for each trading day, your goal is to earn $625 US. That adds up to $3,125 a week. Now, assuming that you're risking 0.5 per trade as mentioned earlier in the video, all you need to do is aim for a 1:1.25 risk-reward ratio every single day to meet that goal. This is of course assuming that you have a 100% win rate, but let's be real, no one has a 100% win rate. At the same time, we don't usually aim for a 1:1 risk-reward ratio for this strategy. The minimum risk-reward ratio that we use is a 1:3 risk-reward ratio. With a 60% win rate, you'll be looking at a total profit of roughly around $3,500 a week, which amounts to $14,000 a month, surpassing the target of $12,500. Back in the day, even a 7 to 8k month income from trading would be enough to replace several part-time jobs that I was juggling, enough to pay my bills and even have leftover money to put into my personal trading account. So I wouldn't be too hard on myself if I didn't hit that 10k a month target. Take it slow, practice discipline and patience. These are the two key factors to pass your prop firm challenges and to get payouts from them consistently. Now, this is the most important part of the video. This is the missing piece of the puzzle that most aspiring traders do not possess, so pay close attention. You need to have the mental resilience to withstand losses and the patience and discipline to claw out of a drawdown slowly. When it comes to dealing with drawdown, I understand the pain that each and every one of you go through. You sit through the trade and it isn't going anywhere. You're starting to get nervous and doubt yourself and your strategy. Price suddenly starts to hit towards your stop loss, and these thoughts run through your mind. Am I doing things wrongly? Was it a mistake to start trading forex? Trust me, I have been there. So I completely understand where you guys are coming from. And that's why I'm here to tell you that there is light at the end of the tunnel. Rome wasn't built in a day. You need to understand that a trading strategy gives you a technical edge in the markets. On top of that, a risk-to-reward ratio of more than a 1:1 gives you a statistical edge in the market. You have all these in your favor, but losses are still inevitable. Learn to accept that. Learn to accept the risk that you take each time you want to place a trade. Learn to accept the possibility of a loss even though you might be in the right direction after you get stopped out. This is trading, and this is real trading. So if you need an accountability partner, a mentor or a friend to keep you in check, then our premium community will be for you. We hold our members accountable by going through their trade journals every single week to ensure that they are not over trading, penning down their emotions and risking properly every single trade to ensure that their journey to becoming a profitable trader is fast-tracked, tapping on the knowledge that William, Thomas, and Leonard and I have. So if there is something that you are interested in having, do join our free Telegram channel with the link in the description below, where we give out our free signals every single day, as well as a full 14-day forex intensive course that can be found in our educational channel real soon. So see you on the live streams, subscribe if you haven't already, and I'll see you in the next one. Ciao.